Bitcoin down to below 20,000. We have a slew of crypto CEOs that are resigning. Those are the signals right now. It feels pretty bad. Why are you bullish? What are the bullish signs that you're seeing?
The whole investment premise of investing now is that you feel, and I'm now speaking, categorically, I've put money in harm's way in crypto across now almost 50 projects and continuing to do so every week because I'm in the camp that says in the next 12 months, something's going to break on policy. I think it's going to be the Stablecoin Transparency Act first, but that in itself should open the floodgates because if you ask big Middle Eastern bank, I don't have to name the names, but they've got 5 million accounts with over $2 million in each one. And they want to just have access to a stable coin, Bitcoin, and one chain. And they want to offer that to their clients. They won't do that until there's regulation. And they are getting ready for that to happen. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be. As an indexer, I put up to 20% in a sector. So just like I would in energy or just like I would in tech. So why not position myself now? I'm not going to get it right. It's volatile as hell. And some of the stuff I've invested in is going to zero, but not all of it. And so I think I'll do quite well.
Kevin O'Leary has fast become one of the most outspoken and biggest advocates for cryptocurrency over the past 24 months. O'Leary believes this space is going to become the 12th sector of the S&P and has high conviction that now is the time to be investing as it's the best risk to reward you'll see as the sector matures. Kevin has been pushing and working tirelessly on one prominent issue in the crypto space: policy. He believes that as soon as we get policy on Bitcoin, stablecoins, and eventually the rest of the market, we are going to see a flood of capital enter the space. Until then, he thinks we will stay in a trading range with Bitcoin floating between $18,000 to $22,000 for potentially years if we don't get some regulatory clarity. Make sure to stick around to the end of the video where O'Leary speaks on why he's not completely sold on Ethereum despite it being his largest position. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
I've seen this movie before. The time to be putting capital to work is when there's blood rushing through the streets. And that's happening in crypto right now. All of these bankruptcies, defaults, changes in management, it's a cleansing that's going on. It's a very difficult time to fund new projects, and any valuations that people thought they were going to get 4 months ago are being cut in half, sometimes down 60%. But the good ideas, and the way to look at this, in my view, when you meet those cohorts, a third of the class are entrepreneurial. And so I'm doing this selfishly. I like to see their projects before the VCs do. So I'm sitting in the class and we go out for beer afterwards, whatever. Here's what I've come to. I've come to this realization. If you ask them where they want to work, these are the brightest men and women on earth. To get into MIT, you basically need a perfect math school. They don't care what country you were born in. You've got to be the best of the best. But they don't want to work in manufacturing anymore. They don't want to work in the existing 11 sectors of the S&P. They want to work on the chain. They believe that the biggest opportunity for them personally is to work in this nascent space that, and the analogy would be back at the beginning of the internet when only pornography was streamed. That was it. We're at that stage now, and so my argument is to any investor, you can't pour that much intellectual capital into a space and not expect extraordinary outcomes, because those are the people that are going to redefine industries using this technology. I believe that, and I invest in them. And that's why it's good to put money to work now, because every day another cohort comes out. Remarkably, we're doing some pretty stupid things. We're throwing them out of the country. They stay here, but they go and work in the Caribbean islands or the United Arab Emirates, wherever they can go to. They're the best of the greatest and the best, and we kick them out. That's nuts. It's a different problem. But the investment thesis is you go where the intellectual capital is going. That's why a 20% allocation to crypto at this point, at these prices, is a very good idea. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stablecoins and Bitcoin and all the projects and Ethereum on down and Polygon and Miston and everything that's coming, the truth is that none of it is owned by institutions, zero. But sovereign wealth and pension that I service in the indexing business, and there's many people that do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, that's $1 trillion worth of demand. But none of it is going to happen until we get some policy. And the truth about this is, and I'm happy to just say it the way it is, there are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. The UAE, Switzerland, France. But the real money, the sovereign wealth capital, is never going to move against the SEC. Never going to happen. And the reason that occurs is that if you're a sovereign wealth fund or a country that's oil-rich perhaps, you're generating $250 million every 12 hours. The only place on earth you can put that is in the S&P. The only way you can do that is being compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules have been determined. So we are being kept out of institutional capital, and Bitcoin is not going to trade above $22,000 until we get policy. Interestingly enough, and this is a personal speculation, if this stablecoin transparency bill was passed first before the Digital Commodities Act, which is the other big initiative right now, if it happens, I speculate that all assets, all crypto assets would appreciate overnight by 10% because it would signal the move for policy. So we should all support the initiative of everybody, and there's other people involved in this. You shout out to Sheila Warren and Perry Ann Boring, who spent countless hours educating legislators on the Hill. Their missions are important, but there's a lack of knowledge, the government, we have to get over this hurdle. So even if just stablecoins, that one thing got policy. And remember, when I go up there, I keep telling these guys, it's just software. It's productivity software. A stablecoin is just software that allows for more productivity and transfer of assets at a much lower cost, much more productively. I think the better way to look at this is the Luna crash, the other companies that were lenders that went bankrupt. In a way, you should look at that optimistically, because what's happening here in this last 9 months is we're scraping the patina and we're removing the idiot management teams out of the market. All these bankrupt ideas will not come back because they were tested and they didn't work. And that's an important way to build a nascent industry. So the litigators will litigate over the assets and the lawyers will sue everybody, and that's okay, because now the remaining players are being strengthened by the fact they're still in business. They're able to raise capital to the extent they're doing that, and the idiots are gone. What's wrong with that? And I think we start now, even though we're in a crypto winter, at a much better place. And I think the fact that they even woke regulators up, when you lose $60 billion, mind you, it was decentralized, so a lot of it was outside of the US, that's maybe good. You got to feel sorry for the pioneers that got the arrows in the back, but they were idiots, so that's okay too. The whole investment premise of investing now is that you feel, and I'm now speaking, categorically, I've put money in harm's way in crypto across now almost 50 projects and continuing to do so every week, because I'm in the camp that says in the next 12 months, something's going to break on policy. I think it's going to be the Stablecoin Transparency Act first, but that in itself should open the floodgates. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be. As an indexer, I put up to 20% in a sector. So why not position myself now? I'm not going to get it right. It's volatile as hell. And some of the stuff I've invested in is going to zero, but not all of it. In managing the decisions on which projects to invest in, because I'm very fortunate, my deal flow is insane. I see everything. And I have to disclose, I'm a paid spokesperson to FTX and a shareholder there too, because we mentioned them. And big advocate for Sam because he has 2 parents that are compliance lawyers. if there's ever a place I could be that I'm not going to get in trouble, it's going to be at FTX. So they're great people, but he gets the joke on compliance, which is why he's working so hard to get regulation. But having said that, picking those projects is really an interesting job because I look for utility. I'm looking for, I think Jeremy mentioned in his keynote, we've got to get away from the speculative price of an asset here. We've got to find reasons that it gets embedded into the economy. And so I'm interested in solutions to, how do we make a blockchain that can actually transact currency? I'm very optimistic about what we've said about Ethereum, but I'm sorry, it's still too slow. And you couldn't work within the currency market with that. It's just too slow. I think we're at a phase now where we've stalled out. I talked about the price of Bitcoin. It's going to go over $22,000 till we have regulation. There's just no capital to move it. It's going to be stuck in this trading range 18 to 22 for 2 years until whatever the Commodities Act gets done or whatever. And you have to realize that. Now, I will say there's capital still going into Bitcoin miners because they're getting awarded coin at 7,000 to 8,000 if they have scale. So it's still profitable, but nobody will fund the early miners that used carbon-based electricity. So those guys are screwed. It's too bad. But the new projects are ones that are using hydroelectric. There's still places for capital to go to work, but there's a pause for policy. And it's never has the anticipation been higher than it is now. Everybody is getting bored with the status quo. And the US has to wake up and get its poo-poo together and start regulating this stuff. So I'm not in the camp that says we need to placate, the original founders of crypto and decentralize and let's fight the government. Screw all that. We know that that's not going to work, and we know that no one's going to make any money if that's the case. That's a bad outcome. The better outcome is regulate the applications on the chains that should be regulated. The policy exists for some of it. Put policy out on stablecoins first. I hope that we consider Bitcoin and other token-based opportunities commodities. But right now what we have is turf wars. Turf wars between the regulators, openly declaring turf wars with each other. Of course they want to control it, but at some point the role of the Hill and Congress is to decide, make a decision. It won't be perfect. In the case of stablecoins right now, what held up that bill were the states. They're not happy. Well, tough. We got to get this thing done, and we got to move on. And we can tweak it, but it's very frustrating at this point. And I think I speak for a lot of people the same way from the institutional side. It's time to get our act together. We're going to keep losing talent. People are going to go work, on some Caribbean island, not where they should be in the United States. This is very important stuff, and we shouldn't be losing our talent because we can't regulate it. That sounds dumb.